Welcome to another Infographic Instant with Brian Michael. In this episode, we're going to be looking at why is institutional investment in China's solar energy so widely dispersed. This infographic is one of the core infographics from a paper which looks at the relationship between finance, innovation, and geography. Now, turning our attention to the infographic, there's four possible dispersion patterns that we might observe when looking at investment in China's solar industry. What the infographic you see in front of you shows is institutional investment in terms of the amount of such investment made by institutions that are headquartered in various jurisdictions. And these are investments specifically in China's photovoltaic companies. Now, there's four possible patterns that we might see in these data. The first pattern we might call the single consolidator. And in this pattern, we might expect a financial center like Hong Kong to purchase most of the shares in these photovoltaic companies and then distribute them out to investors around the world. We would expect an international financial center like Hong Kong to do this because of its in-depth market knowledge, its close access to these companies, and its role almost like a bridge between the companies themselves and the various cultures, needs, and wants of the investors in the institutions that you see in front of you. The second pattern we might call the power tree. And power refers not to electricity, pardon the pun, but to a mathematical relationship. The power relationship, recalling from your high school mathematics, basically says that you will have one investor that consolidates a fair amount of the market, let's say 2/3 of the market. You'll have two investors that have roughly half of that, four investors that have roughly half of that, eight investors that have half of that, and so forth. So as you increase the number of investors, the amount of investment each of them gives in the mainland solar companies gets proportionately smaller. Now, looking at the infographic, we might see such a power tree as large hubs, maybe 3 hubs, located in somewhere like either Hong Kong or Singapore, London, and New York. So we would see 3 of these large hubs, and then we might see 2 or 3 smaller investor centers around those hubs, having roughly half the size of those large regional hubs. And then around those hubs, you would see smaller hubs and so forth. So it almost looks like a tree that's branching down as institutional investment gets smaller, reaching in to the portfolios of people located all the way in places like Chihuahua or Mendoza in the Western Hemisphere, or places like Kenya and Myanmar, thinking around the world. The third pattern might be the direct sales model. And in this direct sales model, we would expect to see no large clustering, but investors would go directly to the companies or directly to intermediaries that would all have their own allocation of shares depending on only what investors wanted. So we wouldn't see any intermediaries. We wouldn't necessarily see any consolidation in the allocation and distribution of these shares, but we would see shares sparkled. Looking at the infographic, we'd see them sprinkled and sparkled across countries exactly as investors wanted them. And so the role for institutions in this model would be much smaller. Now, turning our attention to the infographic, of course we see none of these models. We see a hybrid. But there's 3 interesting points to note as we look at this infographic. The first point is that Hong Kong is smaller than we might expect. Given its geographical proximity and its market knowledge, we would expect Hong Kong to play a much stronger role as an intermediary in China's, what we call the mainland in Hong Kong, China's photovoltaic companies. But we see that Hong Kong does not play that pivotal role. In fact, London, Stanford, Greenwich, of course, even places like Bonn, they play a very important role in allocating shares of these companies through institutions domiciled there off to final investors wherever their final investors are. The second point to note is that unexpected places are bigger than we would expect. In other words, places like Madrid or Mauritius, and I know Mauritius isn't located correctly on the map. Mauritius is actually covered by the box. Places like this have much larger institutional investment than we might expect, given the theories that we've been talking about both in other infographics and in the paper. So explaining why investment in China's solar companies tends to agglomerate in these geographical areas is something that certainly requires further research. And the third trend is that there's some unusual places present in terms of institutional investment. We look, of course, at Liechtenstein, which is not so unusual, but Los Angeles. San Francisco is particularly noteworthy because San Francisco, of course, is near Silicon Valley, a hub of photovoltaic and certainly integrated circuit technology, of which the solar panel industry is part of that larger industry, looking at silicon production. And so we see that there's some interesting places that are starting to agglomerate investment in China's solar companies. We even see them in places like Quebec, in Rhode Island, Columbus, Rockville, Maryland. And this suggests that, well, there's probably a buy-side explanation for the location of this investment as well as a sell-side. In other words, if there is a particular institutional investor that through the course of history happened to locate in somewhere like Omaha or Rockville, Maryland, in the case you see in front of you, then we see investments flowing through those geographical areas simply because of this peculiarity of history rather than because of any strong technical aspects of China's solar industry in itself. But the main message that I think we can take away from this infographic is that there's probably something wrong with Hong Kong's financial law, which causes this dispersion. In theory, if Hong Kong's law was perfectly fluid and frictionless in regards to promoting investment in China's solar companies, then we would probably see much more agglomeration around Hong Kong and much less in places from Nuremberg to Singapore to Los Angeles. This has been another Infographic Instant with Brian Michael.